IBM just handed us a total paradox this quarter. Enterprise clients literally panicked at the last minute and ghosted their software deals just to stockpile heavy hardware. Anyway, welcome to Earnings Unscripted. It's July 22nd, 2026, and we're looking at IBM's second quarter. It's a bizarre mix of a pretty ugly top-line miss paired with weirdly bulletproof cash flow. So, Miro, what happened here?
It's an execution failure wrapped in a supply chain alibi. Headline revenue landed around $17.2 billion, which, well, that missed Wall Street's target by a massive $700 million. EPS narrowly missed too. So, on the surface, the growth story really stalled out.
Right, and the tape reflected that immediately. The stock spiked right after the bell, but as soon as management actually started talking on the call, it just reversed and sold off hard through the evening. And since we're about to aggressively second-guess that management narrative, I should probably toss in our reminder that our takes are purely personal opinions, so please don't treat this as actual investment advice.
Absolutely. Look, the sell-off makes total sense because the top line broke down. But the weird part, the part that actually surprised me, is the margin. Operating pre-tax margins expanded. Management even reiterated their guidance to grow free cash flow by about $1 billion this year, completely defying that revenue miss.
Yeah, that feels like a magic trick. How do you miss the top line by that much, but keep your cash engine running? From what I gathered, it's all about that late June panic, right? The story is that companies were so freaked out by incoming price hikes on third-party memory and servers, they took the budgets they were going to spend on IBM software and essentially rushed out to buy raw hardware instead.
That's the claim. The clients basically said, sorry, we need to secure these physical servers before prices go up next month, so your software contract has to wait. And since roughly 80% of their software revenue is now tied up in recurring subscriptions, that drop in one-off transactions hurt the quarter, but the underlying base stayed relatively insulated.
Insulated is a very polite word for it. But okay, wait, the thing I really can't stop thinking about is this new security product. The CEO gets on the call and says they're charging some companies $1 million a year just to guarantee open source code isn't compromised. I really need to understand how you convince a bank to pay $1 million for software that's technically free.
It's brilliant because they aren't just selling software, they're selling insurance. Open source code is ubiquitous and free, but patching the constant supply chain vulnerabilities costs enterprise IT departments an absolute fortune in labor. Every time a new flaw drops, humans have to scramble. So, IBM spun up these internal AI models to act like a factory floor. They scan, fix, and test updates automatically, without the massive human overhead. They want to monetize all that underlying risk.
Okay, wait. So they basically built a giant firewall for free code. You pay them and they block the bad updates from hitting your servers.
Not exactly a firewall. They actually rebuild and repair the packages for you. Think of it like a water purification plant. The river water is free, but it might make you sick. Lightwell purifies it using AI at scale. Within 2 weeks of launch, they pushed out over 7,500 highly secure package versions. Major institutions like JP Morgan and Goldman Sachs jumped right in, and he priced the total addressable market in the multiple billions of dollars.
That's actually genius. It completely sidesteps the usual cloud wars. They aren't fighting Microsoft or Amazon for computing power here. They just found a universal headache and put a very expensive aspirin on it.
Exactly. And speaking of sidestepping expectations, there's another hidden gear here that totally surprised me. Everyone assumes AI is all about hypercloud deployment, right? But IBM's actually using generative AI to force clients to utilize their aging on-premise hardware faster.
Ancient hardware. You mean the mainframes? Are companies really still buying those?
Oh, absolutely. A huge chunk of the top global banks still run them to manage fraud and logistics. And James Kavanaugh dropped a crazy stat on the call. He said clients deploying watsonx Code Assistant for Z are growing MIPS capacity 3 times faster than those who are not.
Wait, MIPS?
Millions of instructions per second. It's just the old school metric for mainframe processing power.
Got it.
So the AI assistant's writing so much code or running so many operations that it's literally exhausting the physical servers?
Spot on. The AI helps developers modernize legacy code much faster, which unlocks massive new usage. These Z machines handle billions of inferences a day locally, down to 1 millisecond intervals. If the AI tool makes developers more productive, the physical machines hit their limits faster, triggering high-margin hardware upgrades. It's a perfect feedback loop.
That's wild. It completely flips the narrative that AI kills legacy tech. Instead, it's acting as an accelerator. And didn't the report say the current mainframe cycle's running at almost 130% capacity compared to previous launches?
Yeah, almost 130% capacity usage relative to prior program launches. So despite that nasty transactional software mess we talked about, the physical demand underlying all of this remains aggressively strong heading into the second half of the year. They're basically banking on that demand plus relentless internal productivity to do the heavy lifting for their margins.
Which brings up the biggest puzzle of all. If internal efficiency really masks a massive drop in software demand, what happens if those deferred deals from June don't actually close in the third quarter?
Then the cash flow story breaks. Management told us about a third of those slipped megadeals already converted in July, which definitely sounds reassuring on the surface.
Right. A third is nice, but it leaves a whole lot of deals hanging in the wind. If the rest of those contracts just evaporate, that deferred software bump turns into destroyed revenue.
Exactly, and management clearly sees that exact risk. They actually lowered their full-year revenue growth outlook down to a base case of 4 to 5%. They're not pretending demand is flawless anymore.
So they walked back that older target. Honestly, that's just smart expectation management given the macro chaos right now.
Yeah. They dialed their software growth projections down to a 6 to 8% band for the year, so now they have to rely heavily on sheer internal productivity to expand margins, just to protect their bottom line.
So thinking about that spending shift, we have enterprise clients cannibalizing their own software budgets to hoard physical servers. Do you think this panic buying is purely an IBM hangover or a symptom for the whole sector?
Oh, it's the whole market. Capital's getting sucked into physical infrastructure everywhere at the expense of everything else. But IBM has a bizarre advantage. They bought massive hardware inventory early in the year to get ahead of constraints, and their legacy mainframe business is acting like a shock absorber.
They're literally funding a quantum computing and AI revolution using the same fundamental tech stack my grandfather probably heard of. You really can't count them out.
Never bet against a massive recurring subscription base. It's the ultimate financial cockroach.
I think financial cockroach is the perfect note to end on. Thanks for wading through the filings with me today, Miro.
Anytime. Catch you later.
If this chat made your commute a little easier, we'd love for you to stick around for our next breakdown. Just as a quick heads up, this entire podcast, our voices and the script included, is a completely synthetic AI project designed to turn dense earnings filings into a real conversation on the exact same day they drop. We're always looking for new companies to dig into, so toss your ticker requests or thoughts over to earningsunscripted@datamadness.ca.
Have a great rest of your week.